Today we'll be talking about the brand new economic surprise meter and the stock surprise meter within the Edge Finder. Let's jump right into this. So what you're looking at here is the brand new economic surprise meter. And what you can see right off the bat is you have 8 gauges here across the screen. Now, what you'll notice is that these are the 8 major currencies. You're talking about the US dollar, the British pound, the euro, the Japanese yen, the Swiss franc, the Australian dollar, the Canadian dollar, and the New Zealand dollar. And what you'll notice is that each one of these is producing a percentage-based score and a speedometer looking thing going from 0 to 100 on each of our major currencies. Now, many traders may be familiar with currency strength indicators, which show simply like a daily performance change in terms of the price action of these things. What we're looking at here is actually a set of meters that looks at the economic surprise factor for each one of these currencies. Now, if you're confused, don't worry, I'll explain all of it. Essentially, the long story short here is that a lower read on this gauge suggests that the economy that we are talking about, in this case, for example, the US economy, has been recently underperforming expectations. And on the contrary, if we take a look at, for example, the British pound or the UK economy, we can see here that the meter is giving us a higher reading, or for example, an even stronger one recently being the Canadian dollar or the Canadian economy is relatively upbeat compared to expectations. Now, specifically, this is very, very important, and I'll break this down further. When we pull up the underlying data behind this metric, what you can see here is that we have a huge data set of really important economic figures. Things like GDP growth or inflation statistics or jobs report numbers. All of these things are very important to the state of an underlying economy and ultimately drive a currency higher or lower. Many traders at the time of recording this video may recognize that the US dollar has been trending lower in recent months. Maybe some part of this has been the weakening economic outlook compared to expectations. Now, specifically, when I say compared to expectations, what we do here within this to build this data set is we look at the forecasted numbers for these key economic metrics, take GDP, for example, and we compare that to the actual reported number. So, for example, in this case, we were expecting for the economy to contract by 0.3%, and instead we got a contraction of just 0.2%. So that would be a positive surprise, and this is how we're scoring it across all of our major metrics. What this does in its conclusion is it gives us a broad look as to whether the economy, in this case the US, but we have all of our different sets here. If I take a look over on the left-hand side, you can see we have a long list of different economies and whether or not their underlying data is suggesting that they have been upbeat or downbeat in recent times. And we have both a currency impact as well as a stock market impact. We'll get to that in just a second. Now, right here on the right-hand side, you can see we have a better written, explained version of what I just said. So if you'd like to pause the video, we'll zoom in on this so that you can read along with what we're discussing. The currency economic strength page showcases economic scores for each currency. A higher score indicates that the majority of key economic metrics like GDP, PMIs, CPI, etc. have recently been strong relative to economic forecasts. A lower score suggests or indicates that the majority of key economic metrics have recently been missing their expectations relative to the economic forecasts. This helps us to build a full view as to whether or not a particular currency could potentially be strong or weak based on the recent economic data that has come out. We've automated this full process to make it available to currency traders to get an idea of which currencies are beating expectations and which ones are falling short. And we also went one step beyond this and we built an average overall economic surprise meter. Now, listen in close if you are a gold trader. If you're a gold trader, understanding the state of the global economy, in this case, we're looking at 8 major economies within the world. If the global economies of the world are looking relatively weak, maybe there is a stronger demand for risk-off assets like gold. And if the global economy as a whole, which we're averaging these out here together, by the way, we'll go ahead and zoom into this table here now so that you can take a look at this. You can understand how this might be, if everything is looking stronger, that might suggest a better outlook for the future, as well as less demand for something like gold. So let's read this together. The average economic surprise score. This gauge reflects the average economic outperformance or underperformance across the 8 major currency pairs listed above. A higher score indicates a more robust global economic outlook. So this tool has been available to users for the last few weeks, and we had such a positive response to it that we went and took it a step further. Now what we've done is improved things on the average overall for each thing, but we've also added a brand new page for our stock and options and indices traders out there. I'm going to show you here now the stock surprise meter. So what you're looking at here is, of course, the same set of economies, but this time we're focusing on the stock markets of these places. And the currencies of these places and the stock markets of these places can trade independently and differently from one another. So in this case, we would see that the S&P 500 takes a look at that same set of data. Let's pull that up again, the US economic heat map. And what you can see here is that the stock impact score is oftentimes different than that of the currency impact. The major difference here, by the way, if you want to get down into the mechanisms of how this is scored, is actually comes down to inflation metrics. So you'll see here that cooling inflation is not necessarily good for the currency. In fact, cooling inflation suggests rate cuts, which is bearish for the currency. But cooling inflation and rate cuts are good for stocks. So this is where I think as a trader, it is very important that if you're going to be a fundamentalist, you have tools that are perusing through all the data and sorting, filtering, scanning, and scoring it automatically for you. It saves a tremendous amount of time to having to do this by hand each day. Trust me, I used to do it. It was incredibly time consuming. And even when I did it, I didn't do it as well as automating and building the right tool sets to do this did for me. So it is essentially the same thing that we're doing with the currency surprise meter, or the economic surprise meter. But when we look at the stock market, we want to look at things a little bit differently and make sure that we're scoring things appropriately for stocks. So in this case, what we would read at the time of making this video, the DAX, for example, would be a stronger looking one. The Canadian stock market looks pretty strong. And these are things that, of course, you can trade if you have your own setups and all that sort of stuff. But the way to use this would be, maybe in this case, we're going to be a little bit more biased to bullishness on the ones that are getting stronger scores and more bearish on things that perhaps are getting weaker scores. And again, what we've done here, I absolutely love this as a stock trader myself, or stock and indices investor trader. I love this overall average surprise score. So in this case, what you can see is by looking at the 8 major stock markets above, this averages it out to give us a overall scoring for the stock markets of the world at this time, giving us a global stock market outlook. Now, of course, the surprise meters here do focus in on just the economic data. There are also obviously more things that impact prices and things like that, which I encourage you, if you haven't already explored the rest of the features on the Edge Finder, head over to our website, a1trading.com/edgefinder, or click the link in the description down below to explore this product in its entirety. In my opinion, I'm a little bit biased as the creator of this tool. I think it's one of the better tools out there available to traders who want to get involved in fundamental analysis, but lack the tools or even the knowledge and need a little bit of assistance of understanding this stuff better. We've really tried to pave a road here for traders looking to incorporate fundamentals. So if you're interested in getting access to the Edge Finder, again, head over to a1trading.com/edgefinder, or speak directly to our support team if you have questions or would like to hear about current discounts that we're offering on the tool. We regularly do sort of promotions, so if you'd like to find out if we're doing one, just click the link in the description down below. Thanks for checking out these exciting new features, and we'll see you in the next one.